Today, I want to talk about some BlackRock and Bitcoin, pretty wild speculation. And I want to introduce this because it ties in really well with the part 2 that I will put out on this that has to do with BlackRock and their AI product called Aladdin. And they are really absorbing a lot of the Bitcoin out there right now that is currently primarily coming out of the Grayscale fund. But once that runs out, then it'll be off of the public supply. And just as an example, about a week ago or so, there was 30,000 Bitcoin picked up by the 9 new ETFs in just the past 3 days. So we are talking about some really industry and market changing action happening right now. So he refers to his BlackRock hypothesis here, and this is another example on the kind of volume that he is talking about. And he is really wanting people to try to pay attention and think outside of the box, especially with what we are used to in the crypto market right now, that is primarily retail and market maker driven at this point in time. We are quickly approaching a time in his hypothesis where that doesn't really matter anymore. And I will explain that here in just a bit. So here is the actual thread that he put out on this content. And instead of actually reading it tweet by tweet like I did for another one of his, I actually used some AI to put together a video that does all of the talking for me. And I just did that to make it a lot easier to understand. And it's a lot more engaging the way that I have it as well. So you will hear me, however, it is not actually me. With that said, I will just launch right into that here.
Our story begins in the Congo, where a government official puts a barcoded tag on a sack of rare ore rich in tantalum used in all our smartphones. Tantalum is the rarest stable metal on Earth. In fact, you probably never even heard of it until you read this. Tantalum is mined in 5 major locations, which control the source: Republic of Congo, 43% of world supply, Brazil, Rwanda, Nigeria, and China. This ultra rare metal is hidden in your phone and you had no idea it was there. But the big companies profit off of it greatly. These corporations have no intention of selling you tantalum, even though it is highly resistant to corrosion and could be used directly in wider applications as a metal adverse to rust. It would even be a better silver coin and can be held for centuries without decay. So the rarest metal on Earth, mined in only a few locations, is controlled by a small set of companies who hold this asset to produce products that they can then sell to the mass public at a much higher price per ounce of tantalum. Rule number 1, sell the product, not the asset. Many people today are actually very new to Bitcoin and probably know some very basic information about it. So a few facts: 21 million supply divisible, up to 8 decimals satoshis. Each transaction is a difficulty problem for a computer to solve. It takes a lot of time. Today, ED BTC prices in the 40Ks and was only a few years ago. That people would say you are high on opium if you believe BTC would be worth over $20,000 per coin. You would get smashed with hate on social media if you even dared to state this. Rule number 2, no price talk. But we all know now that the market cap of Bitcoin surpassed $1 trillion for a brief time. November 9th, 2021, Bitcoin reached its highest market cap of 1.28 trillion at 67K per coin. At that point, a lot of people were calling for Bitcoin to get close to 100K. We were told the story in early days that Bitcoin was meant to be an alternative form of currency outside of centralized government-based money, that eventually the world would adopt it as a new form of money. It was meant to be about freedom, breaking us from control. Anyone could boot up a computer, connect to the Bitcoin network, and start mining it, contributing to the network, receiving Bitcoin in return as a reward. It was an open, decentralized promise of independence, financial utopia. But then, what happened next? Rule number 3, greed. Mining farms began to emerge where giant warehouses of Bitcoin computers were used to mine Bitcoin, and all the rewards were sold to the market to pay for the behemoth business operations. Today, there are 5 major Bitcoin mining companies that secure the network. The top 5 Bitcoin miners are Riot, Marathon, Cypher, Hut 8, and TeraWolf. There are many more, but minor players are just that, minor. BlackRock owns shares in 4 out of the 5 and will eventually one day in the future own the majority of all miners. Why? BlackRock is in the asset accumulation game. They're out to take it all. They'll even take your ranch. Ask Beth about that. BlackRock and other corporations will control the miners because they then will control the remaining supply of new Bitcoin to be mined over the next 100 years. This is how they prevent new Bitcoin from entering the public market. The miner supply goes directly to them. This is where it gets interesting, because it brings us to a moment in time that many declared would never happen. The ETF, Exchange Traded Fund, a traditional finance vehicle to deliver a product to anyone in the world without the need of actual self-custody, i.e. gold. The ETF is just a basket, a registered security, and you can put anything you want into that basket. Oranges, cows, gold, even money. The asset within the ETF basket is what backs it and gives it value. A registered entity issues the ETF. Investors buy the ETF shares. Just like putting tantalum in your smartphone, BlackRock is going to put Bitcoin in an ETF and sell the world their registered security product. BlackRock must own and hold Bitcoin to back their product, and they're not stopping with just some of the market. Rule number 4, ROI, BlackRock and all others will be buying Bitcoin and removing it from the public exchanges from now until it's gone. Like, as in all of it, forever. As the price goes up due to the success of the ETF, so does the public supply go down, because the price starts going to unbelievable numbers. The public sells at 100K, sells at 200K, sells at 250K, sells at 300K, sells at 500K. What happens next? The public at this point realizes that the Bitcoin sold is not coming back to market. No one will use it because it's too valuable for any type of utility. Panic buying kicks into overdrive. Largest funds in the world become majority owners of Bitcoin held in cold storage. BlackRock now owns the majority of Bitcoin. It will be $1 million per coin. They are not selling it back to you at any price. Understand this. They are doing it for control of the asset, control of the market, control of the future financial network of digital assets. Most of us thought the markets would crash and pile USD into crypto as a savior. No, the traditional markets are about to vacuum up all of crypto and take possession of the most valuable future assets on Earth. And once they have majority control, they're going to turn around and sell you crypto market by means of derivatives. BlackRock drives Bitcoin to $20 million. And who will be there to sell you those derivatives? Who will be there to settle tokenized derivatives 24/7 trading? Those Bitcoin derivatives for every major institution in the world. I'm sure you can guess. The dirty little secret that no one wants to admit or know is that the greatest scarce asset on the planet is going to get sent into a useless cold storage box, while the greatest digital asset on Earth is going to transact and settle its derivative globally 24/7. You ask for the XRP endgame, I give you the derivatives market. That's how Bitcoin dies. Rule number 5, XRP is king.